Hi, this is Jesse Durham, and today we're going to tackle that commonly heard phrase of, but Jesse, I can earn a higher rate of return doing XYZ, whatever the case may be. Now, let's remember a couple of things. Firstly, that Nash said, remember who the characters are. Remember who the characters in the play are. So in the event that we're making an investment, and I'm not here to dissuade anybody from investing, that's fantastic. But consider that the banking function is taking place when making an investment. Who then controls, owns, and benefits from that banking function that's taking place for said investment? That's all I'm saying. We're bringing banking back to the me and the you level. Banking's not an either or choice. It's not can we make an investment or fund a policy for a privatized banking system. No. Remember who the characters are in the play. Now, somebody's going to be making the investment. Again, there are many different camps. I understand that. Precious metals, cryptocurrencies, real estate, traditional IRAs, 401ks, SEPs, etc. Now, again, in the event of an investment, someone is performing the banking function. I just am here to promote the idea that it should be you for you, me for me, us for our families, us for our businesses, etc. We're bringing banking back to the me and the you level. I'd also like to start asking some questions, some genuine questions, such as, do you have in your investing, and you know what that looks like a lot better than I do, but in your investing, do you have a system in place to do certain things, such as mitigate the risk that you assume in a particular investment? Now, that might be a high risk, it might be a low risk, I don't know, it doesn't matter. But there's going to be some form of risk in an investment. It's also important to remember that funding a policy is not an investment. Separate subject. That's a rabbit trail. But do you, in assuming the risk of a particular investment, have you accounted for mitigating that, offsetting that? Well, a policy that you own and control that is a unilateral contract between you and the insurance company, I don't know of a better one. It's a great way to offset and mitigate risk that you may assume in making an investment. Also, do you have a system in place that will receive back the principal funds that you deployed to procure an investment? So regardless of what it is, if you are buying something, do you have a system in place to receive the capital principal that you use, that you spent in procuring that item? Now, let's say it's a home. Let's say it's a residential home, just for example's sake. I'm not talking about simply getting the value of a home, because your dollars, wherever they came from, whether that was carved out of your income, whether you borrowed that from a third party, however you do your investing, those dollars are now tied up in the lumber and the sheetrock of that building. And I understand that you can have equity in that building, but follow what I'm saying here. I'm asking, do you have a system in place to receive the same dollars, the principal dollars that you spent in procuring? I'm not talking about the equity of that particular home, but I'm talking about getting the money back in a system that you own and control. And then also, another question is, do you have a system in place that will receive the interest or the gains above the principal? And one more note on the principal. Remember, Warren Buffett said that what's more important than the return on your money is the return of your money. So that's why I'm stressing that about getting the principal back. Making your investment, but getting the money back. And then you got both. Then also having a system in place to be able to receive the interest or the gains above, because of course we do want our money back, but not just our money back. We want to be able to be profitable in what it is that we're doing. Do we have a system in place where we can warehouse where we can amass that capital for whatever it is that we're doing next, what our next step is on our investing game. So getting the principal back, offsetting and mitigating risk, getting gains on top of the principal back. Let's ask another couple of questions and start looking at taxes, with tax being perhaps the greatest eroder that there is to wealth. What are we doing? And I'm not a tax expert, but I'm just asking us to think about these things. What are we doing to offset what we will end up paying in taxes in the here and now on the gains, on the profits of our investing? Because, well, for one, the death benefit of a whole life policy that's been properly structured for banking purposes with a mutual company that pays a dividend is going to provide a death benefit to you, your beneficiaries, your heirs, tax-free, completely tax-free. So let's ask, in that event of a tragedy, an early graduation, do you have something in place to help offset the taxes that you may have to, or your heirs, your beneficiaries, will assume on these investments, various investments, whatever they may be, the taxes that they will then have to pay? Well, having a hefty death benefit, liquid, can go a great way to providing a lot of options for your heirs and beneficiaries. Do we keep the cash? Do we keep this home or gold or whatever the investment was? Do we keep, both? Are they practicing the infinite banking concept? Oh, that's an incredible thought right there. That's long-range thinking, like Nash promoted, intergenerational thinking. But are we doing something about taxes both for the here and now, and when it comes time for there to be a transfer of the investments that we've made, and we're giving that to our heirs, to our beneficiaries, however we're wanting that to look? Are we accounting for the taxes both here and later? Great things to be able to consider. Again, let me reemphasize, consider who the characters are in the play. You're the one who's actively making your investments, or perhaps not. Perhaps you've just been like me. I was a state employee for several years. I had a very set it and forget it mentality. Maybe once a quarter I would look at a statement and see whether things went up or down, and maybe I knew at that particular time whether I was assuming a low or a medium or a high risk level. But other than that, I didn't know anything about what I was doing, and you probably don't either. But for those that are actively making investments, or those that are just starting to look at investing, remember the banking function is taking place. Somebody owns, benefits, and controls because of that function. And it's not an either or mindset or mentality or approach. It's not like you can invest in something or fund a policy. It's not like you can buy some gold or buy an asset, or buy an investment for yourself somewhere, or fund a privatized banking system. You can do both. And I would encourage you to actually look in Nelson's book, Nelson Nash's book, Becoming Your Own Banker, on page 69, where he actually has a small chapter about rates of return. And he goes through some numbers. And what I understand is that Nelson was a much greater proponent of the philosophy, of the education, of the understanding of the concept, the infinite banking concept, much more than the numbers. But a visual is helpful, I will say that. So I encourage you to look in the 5th edition on page 69 for more information about rates of return, etc., and banking, and how it all can integrate to excel what it is that you're already doing. Now let's look at a couple more things. A big one is going to be that commercial banks, and we can't forget this, because the banking function is taking place in the event of every investment. Commercial banks are earning 3 and 4 figure, now you imagine what that number can look like, 3 and 4 figure returns on every dollar deposited. Now you might be doing great, and I hope that you are in your investments, but an additional right? Because this would be on top of what it is that you're already doing. You don't have to work any harder. You don't have to assume any additional risk. You don't have to lose control to be able to fund a banking system that you own and control. So this would be on top of what you're already doing. So 3 and 4 figure returns, they just can't be overlooked. Now, Nelson in his book said, we are not discussing the yield of an investment. We are discussing the banking function. And that's where he re-emphasized, remember who the characters are in the play. There is the investment. There's also the function of banking taking place. What he said was, we're talking about how you finance what you buy. So if you are buying an asset, an investment, then the banking function is taking place. I'm here to promote the idea that started from his book that you can become your own banker. That you could both continue and expand and grow your investing while controlling more and more, benefiting more and more, taking advantage more and more of a privatized banking system that you own and control until it encapsulates your entire financial footprint. That way, everything that you do eventually, because your income will equal your premiums paid into policies, everything that you do can be financed within your own banking system. Then you'll have the benefits of both worlds. Now, it's not to be understated just how much we can benefit from having a system that allows us to amass capital, deploy it to procure something, in this event, an investment. But then that same system will receive that money back, plus interest, plus the dividends that we could be earning with the insurance company. All while this is taking place, our money in the policy or policies is continuing to grow, compounded, uninterrupted. And this system allows, again, for us to deploy, for us to make an investment, earn on that investment just like we would otherwise, recapture the money back into our system, and grow and expand and grow and expand and grow and expand until our entire financial footprint, everything that we're doing in the investing world, is done, facilitated, owned, controlled by us. Again, I highly encourage you to remember, Nelson said, for us to remember who the characters are in the play. I have an example as well. Just this week, actually, I was on the phone with a client who called me up. It was late in the evening. Very excited. It took me a second to realize what was being said. Very excited. And he was saying how an opportunity had come up, and this is just how Nash has always described it, that when you have capital, opportunities will present themselves. And an opportunity had presented itself to this client, and he was telling me how with what he was structuring, because again, he's the one who owns and controls this system. He has funds to be able to deploy on his own terms, and a system in place to be able to recapture the return of that money plus interest, etc. He's actively practicing the infinite banking concept very well. I'm very proud. I love getting these kinds of calls. And he was telling me, though, on that particular investment that it was shaping up to be a 300% return on his investment. And that was just very, very exciting for me to hear, because I've seen, and this client has multiple policies. He's been strategically building a system of policies, and he had this opportunity to come up to make an investment that was going to give him a 300% return on his investment, and that was fantastic. But I also know, because of how it was described to me, how he is planning to recapture that and the interest, then plus he'll have, all the growth and gain from that business deal. So it was just very, very exciting for me, and I hope that this video has been helpful. I hope that this has caused some thought to take place. I hope it's encouraged you to get back to Nelson's book and see just how the roles in the play, those characters in the play matter. Somebody's performing the banking function. It should be you and I for our own businesses, for our own investments. So if you have any suggestions about something you'd like to see covered, if you have any questions, if you have any thoughts or concerns about how you're doing your investing and you'd like to see more about how you could apply the infinite banking concept into what you're already doing to improve your results, I'd love to have a conversation with you. You can reach me at 828-817-4223, or you can email durhamtalents@gmail.com. I hope this has been helpful. I look forward to our next conversation. Have a great day. Thanks. Take care.